Namaste, viewers. It's Thursday morning, February 20, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's early morning news, where we provide you the latest, concise, and precise stock market wrap. The benchmark Indian equity indices ended Wednesday's choppy session on a flat note for the third session in a row. The benchmarks had started the day on a weak note as investors grew cautious over stretched valuations in domestic equities and global trade uncertainties. Adding to the jitters, US President Donald Trump announced plans to impose 25% tariffs on auto, semiconductor, and pharmaceutical imports, a move that could disrupt international trade and send ripples across global markets. Indices were then marginally up in the second half of the trading session. At close, the BSE Sensex settled at 75,939, down marginally 28 points or 0.04% from its previous close. NSE Nifty 52 settled flat at 22,932, down merely 12 points or 0.05% from its previous close. 25 out of the 50 constituent stocks of the Nifty 50 ended lower, dragged by Dr. Reddy's Lab, TCS, Infosys, Hindustan Unilever, and Adani Enterprises. Bharat Electronics, Hindalco, Eicher Motors, L&T, and Axis Bank were among the 25 stocks that ended with gains. Small cap shares outperformed the benchmarks as well as the others in the broader market, with the Nifty Small Cap 100 index ending higher by 2.36%, led by JBM Auto and Aegis Logistics. The Nifty Mid Cap 100 index, on the other hand, settled with gains of 1.56%. Sectorally, 9 of the 13 major sector indices closed in the green. Banking shares stole the show among the sectors, with the Nifty Private Bank and PSU Bank indices ending higher by over 1% each. Bank Nifty index settled with gains of 0.98%. Consumer durables, financial services, metal, media, and realty indices also ended with gains. However, the other sectoral indices on the NSE, the Nifty IT, auto, healthcare, pharma, and FMCG indices, ended in the red, with the Nifty IT index being the top laggard, dragged by Persistent Systems and Coforge. Meanwhile, Chinese authorities were encouraging their top businessmen to invest in Chinese stocks. This could mean another headwind for India, since Chinese stocks are cheap and may attract big inflows from FIIs, which means FIIs might continue selling in India. So far in February, FIIs have offloaded Indian equities worth rupees 28,335 crore. FIIs will start buying when the dollar depreciates and the US bond yields start coming down. This might take some time. A strong fundamental factor that can turn FIIs into buyers is indication of earnings recovery here in India. This is likely in early FY26. High frequency indicators might suggest a turnaround in growth and earnings soon. Among stock-specific movers, Nava shares surged almost 12% after the board approved a buyback of rupees 360 crore at rupees 500 per share. Arcade developers climbed over 3% after signing a development agreement for a Mumbai project with a gross development value of rupees 740 crore. Adani Enterprises slumped nearly 2% after reports that the US SEC has sought assistance from India's Justice Department in its investigation. IT service firm Hexaware Technologies made a strong market debut, listing at a premium to its IPO price range on both the BSE and NSE. The stock opened on the NSE at rupees 745.50, marking a 5.3% premium. In the US overnight, stocks closed at all-time highs as traders looked past signals the Federal Reserve is in no rush to cut interest rates. S&P 500 hit another record high closing. The S&P 500 gained 14 points or 0.24% at 6,144 for the third time in 2025. The Dow Jones Industrial Average rose 71 points or 0.16% to 44,627, and the Nasdaq Composite edged up 14 points or 0.07% to 20,056. Brent crude is $76.12 a barrel, and gold is rupees 86,070 per 10 grams. Silver is rupees 96,820 per kilogram. Today's outlook for the Indian market: the Nifty has moved within a band, keeping the volatile vibe intact. On the lower end, 22,800 is likely to remain crucial support until 22,800 is broken. Do not expect a significant fall in the market. A decisive fall below 22,800 might trigger a meaningful correction. However, until that happens, the market is likely to remain range bound. On the higher end, 23,000 to 23,150 might act as a resistance for the Nifty. A decisive breakout above the 23,150 could induce a significant rally in the market. Stocks to watch today: HFCL, Vari Energies, Ireda, Tata Technologies, Sundaram Clayton, Orchid Pharma, Rights, Patanjali Foods, National Fertilizers, Cyient, Office Space Solutions, IRIS Business Services, Torrent Power, Sundaram Clayton, Flomic Global Logistics, BSC, and Windglass Biotech will be in focus on February 20. That's it for today, my dear viewers. And if you are enjoying our content, please do subscribe, like, and share this video as much as possible. I need your assistance in that. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.